Midas touch, golden energy. Welcome to Golden Ice Forex, the channel where we talk about smart money concepts and how to trade using institutional trading methods. So today we're going to be covering liquidity, market liquidity. So we'd like to start off with a quick definition of what liquidity is. So in business, economics or investment, market liquidity is a market's feature whereby an individual or firm can quickly purchase or sell an asset without causing a drastic change in the asset's price. Liquidity involves the trade-off between the price at which an asset can be sold and how quickly it can be sold. So whenever a lot of participants get into the market, especially the big boys, they have deep pockets. You have your Warren Buffetts, you have your Goldman and Sachs, your hedge funds, your banks. They are looking to trade off liquidity. They need enough money to sell off or buy off their positions. So just like we had stated in the previous videos about order blocks, the banks and the hedge funds, they leave their order blocks here. This is a sell and they just have to break even on their sell and then continue with the buy in the direction that they want. But first they need to generate liquidity in the market. So people here are generating liquidity on these equal highs right here. These equal highs, and this is an M. If you're a retail trader, you are seeing an M. You are being induced by the big banks and the institutions, hedge funds, and your big boys with deep pockets. People are waiting for this M to finish forming, and where are they going to enter? Your guess is as good as mine on the neckline. So people gonna enter here, sell position, gonna be in deep profit, and then they start putting in more positions. Some people even put in barcode entries here, lots of entries, and look at what price does. Shoots up, takes out this early sellers, and then what does price do with? Shoots down, just like that. Mitigates this order block, continues with the buy, and mind you, there are buyers as well above these double tops, and this is what we call buy side liquidity. You have your breakout traders. They have placed their support and resistance levels right here, and what are they looking to do? They got enticed, they went into the market. Here they're like, oh, 1, 2, 3 touches. This is the 4th touch. So it definitely has to shoot up and then come back. So they are looking for the price to break out and then come back. Then they enter their positions and it goes up. But what happens? You see, this guy's got enticed. The market is rigged, guys. And I didn't want to believe it, but now I see it. Comes up, takes out all these breakout traders. Some people have placed buy stops on top of these highs in case price broke out. Price breaks out just a little bit, they're thinking they're in profit, and then boom, price goes down aggressively. Like, look at that move. There was a lot of liquidity here. So the big banks want to induce you, the big boys want to induce you. So here are the 2 most important things you need to know. Where is liquidity found in the market? Where is the liquidity? Remember this, guys. If you can't see the liquidity, you most probably are liquidity. You most probably are the liquidity. If you can't see the liquidity, you're gonna get liquidated. Being liquidated is being taken out of the market. They hit your stop loss and oh well, the trade didn't work out for you. So this happens over and over and over and over again. So you're looking, whenever you look at the charts, you need to the first thing you need to look at is, where is the liquidity? Where is the liquidity? So there are 2 types of liquidity. There is buy and sell side liquidity. Buy and sell side liquidities are areas of price in which buy stops or sell stops are mostly residing. So let me give you an example. I already gave you an example of a buy side liquidity. Let me give you an example of sell side liquidity. So we have a good example here. People are going to be looking at this area. Some people call them support areas. So people look, oh, 1, 2. On the third touch, they're looking to enter their sales here. This is sell side liquidity. So price goes down, they're in profit. And if they leave their positions over time, because this was an aggressive move, they're looking to hit a home run on this trade. And what do the institutions do? They come back and they think maybe, oh, and these are the breakout and retrace traders now thinking, they're getting enticed. They're thinking, oh, price is just coming back. What is price going to do? Oh, it's most probably going to continue with the rally down there. But what happens? Boom, price goes up, shoots up, takes out their stop losses, And if there was a trader here who had entered their trade here, sold early, and price went down, most probably they got taken out here, thinking that price was going to come back, hit their stop loss, and they couldn't believe it. They thought, wow, I should quit trading. You see, it happens to the best of us when we don't know what is happening. Now this is buy side liquidity. Here's another example of buy side liquidity. They're looking to, this is your resistance level. Oh, and you're thinking, oh, price is gonna come back here. What does it do? Maybe it activates their buy stops and continues going down. Boom, like that. Stop loss is a hit. This happens every time, guys, in the market. Whenever the market opens, there is liquidity. When the market closes, there is liquidity. When the day opens, there is liquidity. When the day closes, there is liquidity. But I'm going to go deeper on that. On the next video, I'm going to cover on liquidity. I'm going to go deeper on that. Don't want to take up too much of your time. So whenever you see a double top or a double bottom, you know there is liquidity. Whenever you see retail trading concepts on your chart, just know there is liquidity there. These are all liquidity pools, so I'll just state them. There are swing highs and swing lows. That's where the liquidity is. So all these lows and highs, this is a lower low, lower high, lower high, lower low. So there is liquidity here, guys, beneath these lows. That's why price breaks the structure. And if you haven't watched the market structure video, I suggest you go and watch it on the playlist. It's number 1 on the playlist. Like I had said, if anyone has watched the market structure video, you know how important it is now. As you can see, market structure is the basis of forex trading. So okay, let's go back here. Now look, price broke this structure right here to the downside. This was a lower low, this was a lower high, this is a lower low. Price, there was liquidity here in this area. There was liquidity here, because some people, some retail traders are thinking, oh, maybe it's gonna form a support level here. Oh, I'm gonna enter here and I'm gonna be looking to place a trade here and go all the way. I'm not bashing retail, guys, but I know sometimes it works, but then it's not for me. It doesn't work for me. So if you're offended, I'm sorry, guys, but this is the way that I trade. So look what happens. Oh, I'm gonna be looking for price to come here. This is my support, and then it's gonna rally up, and then I'm gonna take profit here, and then I'm gonna take my given out on a date. Well, he's gonna go full margin on this trade. What happens? Boom. So now let me give you examples of trades that most probably are in line with liquidity. Oh, before going to that, let me give you the other 3 types of liquidity: equal highs, equal lows. There are sessions, the Asian, London, and New York, the daily, weekly, monthly, high and low. So I'm going to cover all those on the next video. So now let's move on to how we can spot trades that are in line with liquidity. Usually when you take trades that are in line with taking out liquidity, you're going to make a lot of bucks. Trust me. Look at these equal highs. This traders got enticed. They thought, oh, price is gonna come back here and then I'm gonna sell, and then it taps them in and takes them out. Now look at this order block. Okay, if you don't know what an order block is, guys, I suggest you go to the first video on my playlist. Most probably price taps us in here. Where is your take profit? You're looking at place your take profit there, right there. Place your take profit here. Where do you place your stop loss? Just above this order block here. What does price do? Boom, smashing your TP. Crazy risk to reward ratio. Order blocks plus liquidity. And there is also another concept called imbalance. There was an imbalance here, imbalance here, imbalance here, imbalance here. And I'm going to talk about that on the video that follows. So let's look at another example on liquidity, on taking a trade based off of liquidity. Okay, now look at this. This was your trend line right there, your retail traders. Oh, 1, 2, on the third touch I'm selling, I'm gonna make profit. And then price comes here, taps them in. Maybe their stop loss was right here, most probably above this high, slightly above this high. And like, oh no, it's a healthy pullback, price is gonna go down. Oh, it's gonna be in line with this, it's gonna be it's gonna act as a resistance. And then they're gonna see this candle, they'll think it's a harami candle. Oh, I'm going in, and then boom, the stop loss is taken out. Boom. And then what happens? The hedge funds and the institutions placed their order blocks there. Hopefully, if you go on the lower time frames, I'm sure this candle goes all the way down. Look, sniper entry, stop loss just above this high. Boom. If you had held this trade for like 1, 2, 3 days, most probably you placed your TP right there. Price smashing your TP. Crazy. Wow. Don't you just love smart money concepts? I mean, come on guys, come on. Leave a comment down below. Talk to me guys. Who loves this? Who loves this? Look at this again. Look at this again. It happens over and over and over again. Look, there was a lot of liquidity here. Oh, this is a strong trend line. Oh, I'm gonna be looking to sell off here. What does price do? Boom. Look at that. Boom. Here's your order block there. Price came back, placed your stop loss just above the structure, and boom, set your TP on this order block, most recent order block. Price smashing your TP. Boom. So that will be all guys. Before I go, please don't forget to subscribe to my YouTube channel, hit the bell icon to turn on post notifications, leave a comment down below, tell me what you want me to do a video on next, leave a thumbs up, that helps with the algorithm, and I'll see you on the next one.